Opening Playbook is a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. We offer market insights, timely analysis of what's moving the markets right now, trading education to help you build real skills beyond surface level tips and tricks, and live trade ideas, which are real time recommendations that you can act on immediately. Opening Playbook is a free daily live webinar, and the stars of the show are Nathan and Graham. Nathan has over a decade of experience trading Forex, stocks, and beyond. He's worked with dozens of leading global experts on strategy development. He's obsessed with math and systematic edges in trading. He's the creator of the Income Machine, Overnight Options, and more. He's a husband, a dad of 7, and the publisher here at the pub. Graham Lindman is an options expert with over a decade of market experience as well. He studied technical analysis under two of the top minds in finance. He developed wrap order option trades for cost-effective entries, as well as creating lightning trades, moonshot alerts, NVIDIA Elite, Apex Indicator, and Newton. Now, a lot of people in the stock market education industry will tell you that trading is easy if you just follow their quote unquote secrets. Well, that's not us. The hard truth is that trading is complex and takes time to learn, but we make the learning process much easier. The opening playbook exists because a lot of traders have trouble succeeding because they believe many of the myths out there about the market and trading. We'll dispel those myths and equip you to become a better, more mature trader, giving you the opportunity to be more successful. Whether that means using our systems, tools, and strategies, or just trading on your own. Remember, our goal is to be a bridge for both new and advanced traders to go beyond outdated market narratives into deeper understanding. It's important to remember that you should never trade with money that you cannot afford to lose. Nobody likes losing, but there's a difference between losing some of your investment portfolio and losing the rent or grocery money. So please don't trade with money that you cannot afford to lose. And let's be ultra clear, any type of trading involves losing some of your trades. It's inevitable. Controlling your risk, however, will keep you in the game, and we can help you learn structures and strategies to do just that. Our promise to you is that we will be honest and transparent with you about what works and what doesn't, what you should make your own decisions about, and what rules we believe you should always follow. Here are 3 easy to follow rules of the road that you can start with. Stay calm. Try not to trade emotionally. Go at your own pace. This is not a race or a competition with other traders. And ask questions freely. We really do want to help you, and we only know how to do that if you ask questions when you have them. To help you get started, we'd like to offer you some free information. Answer a few quick questions by clicking the link in the banner that I'm popping up at the top of the screen right now. And we will be able to customize our content in Opening Playbook to better serve you. And we'd like to give you a free options cheat sheet. It's a digital, easy to understand guide to options that looks something like this, but will be a lot less blurry when you get the real thing. Now, the platform that we're on is a little different from other platforms that you've probably used, like Zoom. And I want to go over some tips on how to get the most out of these presentations using different features of this platform. So first of all, you can click the hamburger icon, which are those 3 horizontal lines at the top left of the screen, to reduce the size of that green column and make more room for everything else. You can hover over or tap the presentation area and click the speaker icon to mute and unmute the sound. If at some point during the show you suddenly can't hear us, double check that speaker button. Make sure you didn't accidentally mute us. In the bottom right corner of the presentation area, you may have these 2 icons. The double arrow icon will make the presentation area full screen, will cover everything else, give you the maximum view. And the square inside of a square is picture in a picture. That will actually pop out the presentation into a little floating window so that you can do something else in the background, like go to your broker platform or do something else. Now, both of those buttons depend on what device you're on and what browser you're using, so you may or may not see each of those icons. Below the presentation area is this little icon of a monitor. I recommend most of you use this. It will maximize the presentation area, but without covering the chat, so that you'll be able to see the presentation as big as possible while still seeing the chat as well. Next to that monitor icon is a little yellow slider that says low latency next to it. If you're having any video or audio performance issues, click on that little yellow slider to turn it off. That'll create just a few seconds delay in between what we say and when you hear and see it, but it will give the system the opportunity to give you a full quality presentation, and the few seconds usually don't make any difference. Now, the column all the way on the right of the presentation is the chat area. The large area in the middle is where you'll see your and everybody else's chats. This is a group chat. Whatever you put in here, everybody will see. Down at the bottom is where you type your message and either hit enter or click on that little green arrow to send your message. And at the top, there's this green toolbar which has a few icons on it. The far left icon will collapse the chat so you won't see it anymore. I'm not sure why anybody would use that, but that's what it does. The megaphone or bullhorn icon is where you can flip to the announcement section. Now, the announcement section will have any live trades that we've taken during that session, and also has a static set of helpful links that are always there. If you've not seen the helpful links, I highly recommend you give that bullhorn a click and grab as many of those links as you think might be helpful to you. The double speech bubble icon is where you can do private messaging. Now, you cannot private message other attendees, but you can private message any of the hosts, and we can private message you as well. If we send you a private message, you'll see a little red dot on that green toolbar there to let you know that you have a private message waiting for you. And then if you've gone to the private messages or to the announcements and you want to get back to the main group chat, you can do that by clicking on this speech bubble with the three dots in it. Last but not least, this diagonal arrow icon is to pop the chat out into a separate floating window so that if you want, you can go full screen on the presentation on one screen and have the chat on a completely separate screen if you are using multiple screens. And that's it. So once again, welcome to Opening Playbook. We're glad you're here, and we hope that you will fill out the survey so that we can learn a little bit about you and so that we can give you that free options cheat sheet. Now we'll play our theme song, and then we'll get to the live show in just a couple of minutes.
Flip the page, it's time to start the game. Graham and Nathan calling out the names. Opportunities knocking loud and clear. The market's playbook is finally here. Opening playbook, we're ready to roll. Daily moves that fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. This is where the big plays are made. Oh, charts are lighting up the morning sky. They spot the trends with the hawk's eye. Options and plays in a live display. Every move counts in the game they play. Opening playbook, we're ready to roll. Daily moves that fire up your soul. spinning around. With every trade they set the tone, making big calls on their trading phone. Opening playbook, we're ready to roll. Daily moves at the fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh, this is where the big plays are made. Oh. Opening playbook, we're ready to roll. Daily moves that will fire up your soul. Strategy sharp like a razor blade. This is where the big plays are made. Oh.
Welcome one to the opening playbook for Tuesday, March 3rd, 3-3. Hope everybody is having a good day so far. I feel like there are a few people in the chat that are maybe not feeling it so well today, but folks, try and remember that we're looking for overall expectancy. We're not looking for any one particular day to be make it or break it for us. Make sure you have your risk and allocation not too high so that any one thing doesn't make or break your whole portfolio, right? Keep everything in moderation. And speaking of moderation, I don't know why, but here's Nathan. Are you with us and just frozen? Or I think Nathan is having some connection issues. Uh, he's coming and going.
Am I back?
You're back.
Okay, hello. Wow, that was
Hello.
anticlimactic. Well, hello everyone. We got some movement. This was not how I was hoping we would make a move out of this range, but we are moving out of this range with some serious momentum to the downside right now after kind of a delayed reaction yesterday. I mean, yesterday we had kind of the initial fear. We dropped down over 1% overnight, built it back up. We're actually up 30 basis points yesterday at one point, which was kind of wild. And then flushed all the way back down. As you can see, SPY low is like 2.1%, which is a huge move. Now, I think what's going on here is that there was optimism immediately when some reports came out, Iranian leader killed, et cetera, et cetera. There was some optimism this was going to be a very quick in and out. And then now there's some extra fear added on. Well, okay, maybe this is going to linger on, all of that. Of course, the reality is, as we talked about yesterday, war itself is actually not that bearish. It's hard to wrap your head around that, but it's really not actually that bearish. And so I still think that even today, even if people are right and that fear is going to be legitimate and there is going to be some longer term, it's probably still a buy the dip environment. It's just a matter of now it might take a little bit longer. Now we might use this as a catalyst to have a 5% correction that we've been avoiding for all this rotational time. And now we might actually have a catalyst to get down there and then make a move back to the upside. So I'm not going to call that yet. I think we got to be pretty patient because this is very catalyst, very headline driven. It's not just the structure kind of naturally breaking like I thought it would during the rotation. That's kind of the wild thing about where we stand right now, going all the way back to end of December and the beginning of January, we started seeing tech really fall off and the market start moving into industrials, energy, basic materials. I thought that would be a nice, healthy 5-8% correction. We'd find a floor and then we look to go up. Instead, we did all that rotation. And while tech got hit pretty hard, SPY remained completely flat. And now what we're getting is we're getting a catalyst-driven move to the downside here that, could be short-term, could be a true kind of move toward getting us a kind of 5-8% correction that we've been avoiding. But the key here is that because of it being so catalyst driven, you can see we're getting this correlation. And Kane and I always talk about this. When you get, fear in the market, you get everything correlating down to one. One being they have, instead of a 0.5 correlation with discretionary and technology, or a 0.6 with, staples and financials, you get very close to one. Everything correlating with each other. And so when you see this, it's very obvious that there's no structure in the market breaking right now. We're not seeing, some transition of technology being overpriced and now it's getting devalued. We're just seeing a full liquidity flush in the market here, from, obviously something headline driven. Even staples, even energy today, which is kind of surprising actually, haven't really gotten defensive and started rebounding yet. So we're going to have to be patient here. We're going to have to wait and see, where this thing tries to shake out, because again, this looks really ugly and we're obviously overextended on the day today. And so, maybe you're tempted to buy the dip right now, and sure, you could take a stab and see if we get a bounce. But the problem is that because we've been so congested, we're nowhere near like a reasonable floor on this. We're only a couple percent down from the highs right now in reality. What are we, three and some change from the highs here? 3.7% from the highs. And that's literally going all the way back to the January number. So even though this feels like a massive flush, maybe an overcorrection, just keep in mind, because we've been so congested, we're not really near a floor, or a reasonable structure floor. That would probably come down here around 650. So let's be patient. I think there's actually a 50-50 chance this week ends up right back in this box, to be perfectly honest with you. But the other 50% is obviously that we do use this as a catalyst and get pushed lower into, something that is reminiscent of a correction that we kind of thought would come in December, late December or January. So that's what I'm looking at. I'm just going to be as patient as I possibly can. I probably will do some short VIX now that, especially if we're at like 30 VIX, even though I was talking about yesterday, I don't want to short it when it's 21 or 22 in this environment, because we'll probably keep getting headlines. It'll spike again. It'll spike again. But if we're at 30, then I'm willing to give it some time and be short for an evening out. So that's what I'm looking at, ladies and gentlemen. We will have to wait and see.
Yeah, it's definitely an interesting time out there, especially after how good yesterday looked.
Yeah.
I'm going to pull this up. Showing the lotto board right now. One sec. We'll dive into the full breakdown today, but if you guys remember the analysis so far, we've been calling for this consolidation. I believed we were near the end of this range, but I just said, hey, if we get this close below the 100-day, which we hadn't gotten until today, opened and it's cratering, we may see a move, I believe, to the 200-day line, which is also our November support area. So I don't know that this market decline is done. I will walk you guys through it today and why I say that. But yeah, definitely a time to have trades in both directions. If you have the lotto board, again, it gives you the bullish and bearish picks. Many of these are probably up already nicely today, but we'll cover that more in detail at the 12:30 members only masterclass. Let me resize my screen. Alrighty. Well, Nate, anything else on your end?
No, I'm curious to see what you think, because I think, like I said, I'm kind of sitting right on a coin flip. I could totally see us finishing right back in this zone by the time Friday closes. But I could just as easily see this as finally we just have enough catalyst of bias to flush us, where we've been avoiding, in my opinion, for several months. So I'm curious to see what you have to say.
Yeah, definitely. We'll dive into it. Darren has an interesting note in the chat. He says, speaking of buy the dip, today's gap down in gold seems like a good opportunity to do the Friday gold trade 4 days early. I was very, very tempted to do that this morning. Here's GLD. I promise I'll dive in next. Down 5% today on gold. Luckily, our strikes are all the way down here, so we're still well in the clear as of now. But yeah, Darren, I'm definitely thinking along the same lines. I'll probably just hold off until Friday, just to keep the routine and the pattern. But if you guys are loving this gold income trade, today is not a bad day to be looking to maybe get the dip on gold. So thank you, Darren, for bringing that up. Telegram of the week. We had a hopefully you guys have been hanging in there. I know it's been an ugly, ugly market since October. We've chopped sideways since October. Here's my P&L year to date. It's funny. So up about 11% year to date in my account. It's my retirement account. I can't contribute to it. So when I do my more aggressive style of trading in with the options, with more speculative picks, up nicely to start the year, up $22,000 in the account. It's funny, Nate, every time I post a screenshot though in Telegram, the next day is going to be a red day. So if you guys are in Telegram, make sure you're in there. If you see a screenshot showing P&L, might be time to buy some puts.
Time to short.
Because I think I'm down about 3 grand from there today. But overall, a solid start to the year. So I'm hoping we can have a great March, April, May. There should be good markets coming up for us, I believe. I'll show you why. The gold trade update, 16-0 on the books, still undefeated there. Again, 5% drop in gold today. Let me just check our nearest strikes. Our nearest expiration strikes are 422. So just to give you guys an idea of how good this is, gold can fall all the way to here. Let's see, where's the 6th? 422 to my crosshairs here, and we'll still make $500. So it's barely even taking a hit on our position that should close this week for a nice profit. Again, I don't want to jinx us here. But overall, loving the gold trade. Silver is down 11%. Yikes, yeah. But the gold income trade, because of how we're doing this non-directionally, is hanging in there, doing all right. Another 700 open right now. For our morning market update, and we're down just slightly from here. Here's how the markets look. Nice and green today. Lots of tickers up. Just joking with you guys. VIX is up 23% overnight. Everything else down red and ugly. I mean, 2% is an ugly, ugly market open. So we're taking it on the chin right now. My personal belief is we're seeing more of a resistance in the war against Iran right now than initially expected. It kind of seemed like we had an early victory lap there, where it was going to be a quick strike and done, and new regime, and everything was going to be all good. Maybe not so fast. We'll see how this all plays out. For the economic news this week, which really probably will take absolutely zero precedence this week because everything is so focused on the war right now. The main reports we have are on Friday morning. Retail sales will be an important one for discretionary stocks, and then unemployment rate. Next week, we have preliminary GDP on Friday, and then CPI on Wednesday. So this one will be more important than any of those others I just showed you for Wednesday next week. And this one will take precedence still, even with the war going on. So just keep that in mind. For next week, Wednesday, we'll have another session before then. So don't worry, you don't need to do anything about it right now. All right, here we go. Charts of the week. Here's the first one we'll look at. This is the S&P after major geopolitical events. This is looking 1 year forward. So I think when Nate says that war is typically not that bearish, it's actually just fine. The market shrug it off. Over a 1 year period, that tends to be true. On average, when one of these events strikes, if you look 12 months ahead, averages a 14% up year in the markets. So in theory, if the average holds true right now, even though things are ugly, on average, stocks should be about 10 to 15% higher 12 months from now. However, this is going to be a little bit tougher to see, so I'll zoom around with it. However, if you break it down by 1 month, 3 months, 6 months, 12 months, you'll see a little bit different picture. And keep in mind, this research here showed what, like 10 events. This has about 25. But let me go ahead and zoom in here on the 1 month to show you. Let's do this.
Keep in mind, Graham, that one has a lot of the other events in there too.
Yeah.
There's
like
a lot
more.
Big ones are like Lehman Brothers, obviously not war.
No. And obviously a much different reason for markets to drop.
Yeah.
I'm not so much looking at the average move nor the median move. What I care about here is when fear strikes, like it seems to be now with the war that snuck up on us. This is 1 month period, the S&P 500 went higher 46% of the time on average. That's a win rate of 46%. To give you guys an idea, does anyone know the normal average of all years, all months combined what the average win rate is if you buy any day of the week and hold it for a month? Well, I'm going to quiz you guys. Some of you guys may know it because I've covered it a few times. Oh, Jeff, you're close. Dave, you're a little colder. That's all right. It's 58%. So the average monthly win rate in the stock market is 58%. If this number showed 56%, I would say it's no big deal. We'll probably just go straight higher from here. If it was 53%, I'd say we're probably still okay. This is 46%. That's a big shift. That's a, on just basis point, it's 12% different win rate. It's a big decrease over the next month. Now, the reason I show you this isn't to scare you. Maybe some of the downside is already in. My point here is that over the next few weeks, we will probably see more volatility. I personally, now where we're at currently, unless something miraculous happens today, I personally think we're going to probably see the 200-day moving average first before bottoming out. I do think the other side is going to be really, really good for us. Anytime we get a nice dip to the 200, it sets up opportunities like the dream portfolio. Or if you have the lotto board, some of those very, very outsized opportunities that have a much more realistic shot of hitting than in a choppy market. Whenever we get a big directional flush, it sets up some of the best opportunities of the entire year. So don't be shocked if we see more volatility, more downside over the coming couple of weeks. 46% win rate is not good for the stock market. All right. And I'm not saying this to scare you guys. I just want to show you the data and what I'm seeing. This is an interesting chart. This shows the percentage of stocks in each sector at their 52-week highs and 4-week, 8-week, 12-week. If you just look at the red candle here, that's 52. So 1 year highs. We know energy has been hot, right? Everybody's talking about energy right now, especially with this whole oil crisis we've got going on with the current environment. We know energy has been crazy, but did you guys know that over half of utility stocks are at 1 year highs? Utilities are not the most exciting names to talk about a lot of the times, but we've been covering this in the opening playbook that utilities is one of the best sectors, seasonally one of the best, currently one of the best. Utility stocks are red hot and frankly a little bit overlooked right now. Whereas we know financials have been terrible, tech has been terrible. 0% of tech stocks, look at that. 0% are at 52-week highs. It can't get lower than that. So while many stocks are taking it on the chin right now, we can look to what's winning to find opportunities even in this market over the next few weeks to the upside. And then also, I think, play the downside too by just using puts. All right. Now for the good news. If you guys have been paying attention, you know the presidential cycle typically bottoms late February, early March. The Fed cycle typically bottoms, in this instance, late February, early March. I thought, if there was no war right now, I have a pretty good feeling we'd probably be near all-time highs right now. But even so, here's just the S&P 500 just over the last 20 years to give you an idea. Of course, you guys remember last March, right? Does everyone remember last March what happened? It's not so fun. We had the tariffs. We ended up bottoming in April. So don't take this and say it's an exact science that we're going to bottom here on March 15th or whatever that date may be. But this gives you a good idea of what the S&P 500 typically does in March, or I should say February into March. Typically bottoms in March. On the other side, typically really, really strong, really bullish, much, much better, far outperforms the drop we're seeing. So I show you this to give you some good news here. I'll give you a little bit of a more accurate 2-3 month prediction here in just a second. Larry says, let's not get into political commentary. Oh, you're maybe referring to the chat. I try my best to steer clear of political.
Yeah, he was referring to the chat.
Okay. For earnings this week, these will be interesting. We have CrowdStrike after the close today. We'll see if this one gets drilled. A lot of those names, cybersecurity, software stocks have just been getting drilled off fears that AI is going to replace all of those companies. CrowdStrike may be one of them that will see a drop. Who knows? We'll see. I'm not playing it. I'm not gambling on it, but I will go back and see what they have to say and see how the stock reacts. If I were to flip a coin on it, I would say probably to the downside. And then Wednesday after the close, we have AVGO, Broadcom, big chip stock. Top 10 stock in the world, at least it was. I haven't updated that list in a while. But by market cap, one of the biggest in the world. The little brother to Nvidia, if you will. That'll be a very interesting one. It will probably affect the whole tech market and the Nasdaq, depending on what they have to say. And then just for a fun one, Thursday, Costco is a staple stock. It's been having a nice resurgence here after quite a few months of a drawdown. We're seeing staples return. Costco is one of them that's looking solid right now. So it'll be interesting to reflect on what they have to say for earnings. But none of these names, there's nothing here where I have an edge or any sort of conviction on positive or bearish. But this just goes to show you that there's still earnings going on in the background too.
I can't believe you just skipped right over the most AI resistant stock out there, Cracker Barrel. I mean, you can't replace Cracker Barrel with AI.
You guys got to notice. Do you notice anything about Cracker Barrel? Anything about how it looks? The logo's back. Oh, that was funny when they brought out the new logo and the stock tanked. They reverted. It's amazing what'll move markets. It's not the financials, it's not the technicals, it's the logo. So if AVGO comes out with a new logo on Wednesday, watch out. Awesome. All right, so there's just a quick glimpse of what's going on. Market overview. This is what I told you guys last class. I said, I believe we're at the tail end of this. We knew consolidation was coming. We should not have been surprised by that given the presidential cycles, the seasonal cycles, everything going on, momentum slowing. But I told you, I believe we're at the tail end of this. And if we get a break to the upside, specifically a break above the highs, I think we'll run 5% from there. But I said we need to hold the 100-day line. If we can do that, I think if we hit all-time highs, we're going to go another 5%. If we break through, we'll probably flush to the 200-day moving average. Does anyone know what came next? Well, I just showed you. We officially have a breakdown in the markets today, and we are still going lower, about 1/3% lower than where I started this class at. I'll show you right now. Bring the screen back. Oh, it didn't come. Here's your current update. This 100-day moving average, again, it's nothing fancy. Everybody has it for free, everybody in the world. Nothing crazy here, but it has just been a classic support line for us in the past. Support, 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 support. Even going way back here, we found support. Now we have broke through it today. For the first time, it looks like we are actually going to close below it for the first time in many, many months. That's where we are right now. We're kind of in this free fall zone where we probably will not see a ton of support. You can see there's not a lot of price action traded at this level. The next level of price action is down here, which so happens to coincide with the 200-day moving average, which is another classic support line. So that's where we are right now. That was my analysis last week, that if we get a break, there could be more downside ahead. Where do we go from here? We're still in fear mode. I probably should update all these. I build this deck the night before. So obviously I wasn't able to see the markets collapsing this morning, but let's go ahead and get an update. Fear, we're almost in extreme fear, not quite. Again, when we get to extreme fear, especially, below 20 levels, typically that's a contrarian signal for me where I say, okay, maybe we're overextended here. We might want to start buying. Even though everyone else is scared, we'll start buying because we're probably near the bottom. Put to call ratio, I put a note here. Let's get a fresh look in the morning, although it may be skewed today. That's not too bad. Let's look. I just wanted to update everything since so much has changed since last night. Here we go. Oh, this one looks way different. All right. It's at 0.83 today. I'm not updating it because I wanted to show you this. Jason pointed this out. Jason's awesome. Pointed this out the other day that we dipped below 0.75, which for some reason, Nate, I don't know if you know the difference. I check put to call on bar chart, Thinkorswim, stock charts, trading view, and they all have different numbers.
Yeah. I always wonder, are some doing it just on the index versus some doing it across all stocks versus some doing it across certain market caps. I really don't know why they're all different.
Yeah, I don't either. But Jason noted this, so he bought puts. He actually did SQQQ calls, which is similar to buying puts because it's an inverse asset. made out nicely because he spotted it. So that's why it's important that you guys check this every morning. He saw that the bulls were a little bit overextended, even though the markets weren't really moving a ton. So he took a trade to the downside. But again, we will wait. What we want to see for us to get really excited, really bullish again, is we want to see it come back above this one threshold. So we're right now, someone said TradingView says 0.94. Bar chart right now says 0.83. Let me look at Thinkorswim, see what it has to say. Oh, Thinkorswim says 101. So we got all sorts of different numbers. But typically what we want to see, what I look for is in the morning, if we're above this one number, typically means we may see a leg up. We're not there right now. Credit risk, this doesn't move a ton week over week, but it's something we're just going to update every single week because similar to the CPC, this gives us a good idea of what the lending is, right? What the environment is like if banks are getting scared, if they're going to increase the spreads on their loans, which just means that it's less trustworthy lending money. Right now, we're still in the green zone, which is a good long buy zone, just from a broader point of view. But you can see here, we are starting to spike up. Let's see if they've updated their data yet today. Yeah, look at that here. Let me resize my chart again. You can see even today, the spike continues. So 0.86 on the spread right now for credit risk, which is not a total warning sign for us or anything. But if we get above 1%, I'll have to pull up that chart again where it shows you if we get above 1%, typically that means there's a further drop incoming. If we get above 1.25, that typically signals a deeper recession or a crash coming. So we're nowhere near that right now, thankfully, but we are ticking in that direction. So we will continue to look at this week over week. All right, let's go ahead and take a look at the market breadth. This is actually exciting to me. It's not the prettiest market breadth we've ever seen. But what we're looking at here, this is last week, and then I'll show you this week. Percentage of stocks above their 50-day moving average, which means the percentage of stocks at least at or near all-time highs or in a bullish trend, looking good. We were at 50% last week. As of yesterday, we were at 52%, which again, if we consider how bad tech has looked, how bad financials have looked, it is encouraging that 52% of stocks are still doing quite well overall. That's a good market breadth, which just means if you look across all the stocks in the market, it's not like there's 5 holding up the whole index. There's 52% of them that are doing really quite well. Same thing for the 200-day moving average. Percent above, we want to see this at 60% or higher. We are slightly below that. 59% is probably lower today. It's got to be. But 59%, so even though a lot of those tech names are getting blasted, most of the financial stocks are below their 200-day moving average. The broad market is still holding strong. That's where we see things like energy, industrials, utilities, staples even, all doing quite well right now. So it's a little bit more of a challenging environment because for the most part, we're used to trading those popular tickers like Amazon, Microsoft, Apple, Nvidia, all the fun ones. In times like these, we got to expand our horizon, expand our watch list, and find the ones that are winning right now because there are stocks winning. If this was down here at below 50%, it would be a different story. But we are still in a healthy market breadth right now. Man, you guys all hit 60-minute already? I have not. I saw a couple people say it. I haven't hit yet. Let's see. Oh, it's showing 157%. We're getting some crazy prices right now. But haven't hit yet for me. But congrats to you guys. All right, seasonally speaking, we'll keep looking at this. Here is our chart of October. This is the, comparing the .com boom to the AI boom. Red line's obviously AI. Blue line is since the launch of Netscape. It's just showing you kind of how these patterns play together. It's not going to work exactly to a T, but you can see this is at the point in time where typically there's a lot of chop, a lot of drawdown. This is one of the reasons why we expected more consolidation. Typically a small cool-off phase in these names. However, looking back at the .com era, it was followed by 3 months of a nice run higher. In this case, the NASDAQ went, what, 30% higher. I don't think we'll necessarily see that. But typically, this period of time is followed by a nice bullish move, which I do expect. Presidential seasonality, same sort of thing. Again, through January and February, not so pretty, down on both accounts. We were pretty much flat for the most part. Now we are down for sure. We're down on the year. However, looking ahead, March, April, May, very bullish, very similar to this, even though these are two totally different seasonal charts. They both point towards the same thing. And then here's our Fed one that we look at for a new Fed chairman coming in. We are entering this seasonal window where we typically see a move higher, and it actually extends through about July in this instance on this chart. So as we go week to week, I believe this is what we'll see happen at the tail end of this. However, right now, remember, over the long haul, over the next 12 months, typically the markets do quite well. Very, very good time to be long, maybe buying the dip. But in the 1 month, short-term period, 46% win rate in the S&P does not get me excited. It doesn't get me gung-ho saying today's the day to buy, go all in. I expect more volatility. We may open up 1% higher tomorrow and may come back the next day down 2%. We're just going to see more of this chaotic volatility. So again, I want to encourage you guys, hang in there. I believe we're probably going to touch the 200-day moving average on the S&P 500. We're about halfway there already today from the fall through the 100-day moving average, but this is just, again, very, very basic support and resistance in the markets. We're in a free fall area right now. We'll probably see more volatility. Feels like a coin flip. Come one day you're up, come back the next day you're down, back next day you're up. My goal, Nate's goal, David Mound's goal here is to make sure that we're putting you in the best place possible to be making money in all the environments. In my opinion, the timing couldn't be better for things like the lotto board. Obviously, like you guys know my wrap orders, those work excellent in a trending market where you can predict market direction very, very easily, where you can, or much more easily, I should say, where stocks are healthy, they're going up, shoot for 100% week over week. Right now, I'm liking the idea of going for those outsized gains on volatility. So if you have the lotto board, give me a yes in the chat if you have the lotto board. You may want to be looking, in my opinion, to the bearish side right now, just because I expect some more volatility and push to the downside to the 100 or to the 200-day moving average. You can see the returns can get pretty awesome. I looked at a couple this morning. Home Depot was one actually. That was a huge payout for like a 2% move. So look at those. With that said, guys, a lot of yeses, awesome. We will probably also, much like March and April of last year, we will probably have days where we wake up and the markets are up 1.5%, up 1.25%. So if you do add some bullish ones, don't be afraid. If you wake up the next morning and your pick's up 150% overnight, don't be afraid to book profits. In my opinion right now, those quick plays from the lotto board should pay nicely in this crazy environment. All right, let's look at the sectors right now, and then we'll dive into some trading. Again, I don't want to force anything right now. It may be a little bit of a wait and see period for us, but we'll come to that next. So sector view. Typically, March and April are two of the best months of the year for the S&P 500 as far as the sector breakdown goes. There are some that are stronger than others. So we'll look at this here. The strongest sectors right now, or excuse me, not right now, let me do this. Seasonally speaking, if I were to just highlight the ones that perform the best, there's a lot of them. Communication services. Don't go write that one down just yet because I'm about to nix it from our list. Utilities, which you guys know based on that chart I just showed you, utilities are actually the best performing individual stocks right now on a 52-week basis. So do write down utilities. XLU, write it down. Energy, very similar. 32% of energy stocks are at 52-week highs. It's been the best sector for a couple of weeks now. Hopefully you've been taking advantage. Also seasonally in March, and look at April actually. Look at April. This is one of the hottest streaks for energy, heating up for summertime. So definitely keep energy at the top of your list. Industrials, materials, consumer discretionary, and real estate. Don't write these two down. They're going to get nixed as well. But seasonally, we can see that it's typically a good time for outperformance amongst individual sectors. So, how do we look week over week? This is going to tell us our real time price action on the sectors, which ones are performing the best to the worst. Right now, week over week, look at this. This is, I think, the first time I've only seen one shift. Normally, we'll get a couple. Normally, one will
Yeah,
move three
that's
spots.
unusual.
Yep. The only two that switch, and it doesn't even really count because I'm comparing the Russell to a sector, but the
Yeah.
IWM and XLV flipped. So there you go. That's it. Nothing to write home about here. So we're going to still rock the same sectors here. Uh, Energy, materials, industrials, staples, utilities. I didn't include healthcare just because if we look here, I like a lot of healthcare stocks, but if we look here seasonally, it's not the strongest. So we've got a lot of great sectors to choose from. Healthcare just doesn't line up as well as some of the others. So that's why I didn't include it in the list. There's still some good names, but if we were to focus on just a handful of sectors, these are the ones to look at. I put a yellow box around real estate and tech. These are kind of my waiting list sectors. I think these will end up being very, very hot sectors later in the year. So they're names that you may want to be looking at, adding to your watch list, looking for opportunities if we do get a deeper flush to buy at an extremely deep discount. Right now, it's not a high conviction sector for us. If you're looking to the downside, right now, financials, tech, not looking pretty. Communications, not looking pretty in the meantime. Oh, yeah. Again, this is cool. So look at this. Just to show you guys how well this all works together. This screenshot here is the real-time data based on the 1 month, 3 month, 6 month performance of these sectors averaged out. Currently, in this current market, energy, materials, and industrials are on top seasonally every single year on average. The best ones, energy, look at that, industrials, materials. It's amazing when it all lines up. It's funny. It's like you could probably take a screenshot of this. I'll leave it up here. I'll make it clean. You probably should take a screenshot of this. Again, it's not going to work. You can't, energy isn't going to be up 1.6% every single March to a T, but it gives you a good idea of what's coming up next, what's heating up, what's cooling off. And it does a great job. There's been multiple instances on these Tuesday breakdowns where the top sectors perfectly align with the seasonal patterns. It's
Or
actually
better yet, instead of a screenshot, get the $1, or in addition to the screenshot, get the $1 opening playbook membership, and the slide decks from every Tuesday are in there. I go
True.
back to it all the time and see these grids.
That's a good call. So if you guys want to, it's $1. It's less than a McDouble cost now, I think.
Right? It's like
Um,
1/7 of a Starbucks coffee.
Yeah. And you can keep that for a lifetime, not just for a morning drink. All right. So let's get into the nitty gritty. Let's see if we can find some trades to take today. We'll look at Apex, the on the clock stocks dashboard, and Newton, and then we'll talk about the Lotto board for a second. So let me go ahead and get my, gotta move this Zoom thing. All right. We'll start with the Apex software. If you have the Apex software, and I hope you do, as a reminder, the highest conviction plays check on Friday. That's when the weekly candle closes. This uses weekly price action to tell us the stocks that have weekly momentum breakouts. We're going to do it today on Tuesday. Ooh, AJG. Not the prettiest trend. It's financials. Don't love it. PGR. Oh, there you go, Nate. Progressive. Again, typically what we want to see, and the reason I said we may not have entry signals today is because we want to see good stock, good sector. This is a, Progressive and AJG are financial stocks. First off, not a pretty chart, right? Not a pretty chart, even though it's worked out quite well, 77% win rate in the past. Probably one of those losing setups. If we look here at our current performers, financials is the worst sector. So it's not going to be a high conviction play for us today. So I'm going to go ahead and just make a note here for you guys. No high conviction setups today. With that said, again, if you have the Apex software, just check it on Friday. Typically around noon is fine. Anytime after noon is great. See if any new green bubbles pop up as an active signal. I'm curious how O'Reilly is doing right now. Kind of chopping
Oh,
around.
oh, oh,
Yeah,
O'Reilly.
sing it for us. Chopping around. I would be looking more towards the non-tech stocks right now. Let's see. Lilly, I think, is just chopping around. Yep. Not a lot of action here, so there's no reason to force a trade. Last thing you want to do is toss something on there that's not high conviction just because you feel like you need to have something. That's not what we're going to do. Alrighty, let's look here. Next on the clock's dashboard, this is going to tell us seasonally, and it's so cool that the team made this where it automatically does it because we used to have to go pull it manually. If it'll load, uh-oh, I may need to hit up our developers. Oh, no.
What if you hit that slider?
Oh, yep, that's what it is. So this is a filter here to show only stocks above their 9 EMA. Thank goodness you said that. I was about to hit him up and say, "Oh no, what's happening?" All right, that makes a lot of sense. This is a filter here I threw on here, guys, to only show the stocks that are breaking out currently above their 9 and 20 EMA. Obviously, with the most of the market down, we're not getting anything right now. Currently, no high conviction picks for us today, Tuesday the 3rd, blank as can be. If we're looking forward, wow, this one's down 10% today. This is Friday's pick. I'll give it to you guys early. Probably won't give you guys options, but if you have the dashboard, check it on Friday. When you mentioned, Darren, when you mentioned doing the gold trade early, this could be one of those candidates. So IAG is a gold miner. It's gone up every single year. You can see right here the data for the last 10 years in a row. Gold has not been a breakout for 10 years. It's been in a breakout for about 4 years. Even so, this stock has gone higher every single year. This is a 27-day hold time. We'll just give you guys the underlying, and this is a very probable or a very realistic average return this year, right? Just because of this dip we're getting. We'll see more volatility, which can be good for the upside as well. But IAG is the ticker. Your entry is on March 6th. So that would be Friday, March 6th. Your hold time is 27 days, which puts your exit at April 2nd. So you buy it, hold it for a month. If you've done that every year for the last 10 years, you would average 16.2% on the underlying, on just the underlying stock. That's a pretty good yearly return, let alone in about a month. So that's a really, really good pick, in my opinion, for Friday, especially if we see more of a drop this week. Definitely one you want to write down. If you have the dashboard, of course, you can get the options pick as well, but I'm not going to give one today just because there may be more downside ahead based on everything I'm seeing. So let me go ahead and,
I dropped it in there.
oh, cool. I'll toss this in the slide deck. I'll make a note for anyone
Yeah,
reviewing
Eco,
later.
wait until Friday for that one.
Friday entry, not
Friday, fun day. This
next
on the clock
big.
dashboard is its own program. If you're interested in it, I can pull a link.
All right, make sure, guys. Again, if you review the deck later and you see Friday entry, it's a very important note. Mark, question on lotto board: is there a way to look at news for those trades? Mark, it doesn't pull news directly on the lotto board, just a price action and setups based on the market maker move. But if you have Thinkorswim, not everyone knows this, but it's kind of handy.
Yeah, the little widget.
Yeah. So like here, let's go AES. You can't really see it, but this N stands for news. If I click that, look at this. It'll show you all the news, Mark. So hopefully that's helpful. And I don't know if you use Thinkorswim or not, but I find that to be handy. Let me see if I got any other questions.
I'm dropping the link for a replay of the on the clock dashboard presentation if anybody wants to see it.
Cool.
How much for all Graham programs lifetime? You got to call our team and find out because It depends on what you already own and stuff like that. That's what we call our diamond membership. I don't know if that's open. Is it? Is it open right now?
I am not sure. I know we did before the Lotto board release, we opened up, I think,
Yeah.
25
I'm
spots.
not sure
We
if we
may
still
have.
have any. I'll give you the number to call DML.
All right, cool. Last but not least, we're going to look at Newton, which is my momentum indicator. Just a fair warning, we're probably going to see about 1 trillion short positions today because of the market drop. Doesn't mean you take every single one of them, but let's find some that align and might look good right now. Here's our long scanner. Typically, what we want to see is a stock in a good trend in the sector aligns. Alrighty, we got one. GD, I've never traded this stock before. GD, which stands for General Dynamics Corporation. It's a nice trend, right? We looked here. Let me just show you the other ones, why I flipped them so fast. ICE, not a pretty trend. Tyler Foods, not a pretty trend. Autodesk, not a pretty trend. Take Two, not a good trend. We got down here to GD, which is actually down slightly today, but a pretty trend. We've got Newton here flipping. You can see where it flips green. That means buy. So flip green today, which means that we're getting an above average acceleration in this stock right now. And if you click this, another fun tip for you guys, if you hit Analyze in Thinkorswim and select the Fundamentals tab, you can see the sector it's in. So I'm on GD. Sector is industrials. Does anyone remember if that's good or bad? Man, why didn't this move? Here we go. If we go back to our sector chart, industrials is the third strongest sector. Seasonally, it's one of the strongest sectors. Oh, there you go. Military, Chris says. So from our Newton long watch list, GD is the only one I like today. People are saying defensive stock. Yeah, it's just here. Industrials, aerospace, defense company. It's kind of probably like HWM is aerospace, GE is aerospace. So GD popping up today for us as a good opportunity for Newton long. Now we'll flip to short. And again, we'll probably see a whole bunch of names. I would like to see one breaking down. Apple is a Newton short. However, you can see actually Apple's held up quite well. Like, let's look at Meta below the 200-day moving average. Microsoft just terrible. Amazon just terrible. Apple's actually holding up quite well, so I'm not going to jump in on this one. Ooh, ISRG. This is a name that's been getting beat up as of late. It was an amazing stock for a long time, but it looks like it may be heading lower. It had some resistance off the 200-day moving average. Newton has flipped bearish here. You can see the last time it flipped bearish went down, let's see, went down 40, 50 bucks on the stock, about 10%. ISRG, which is a healthcare stock. Remember, we're not crazy excited about healthcare. There are some good names in healthcare, but it's not one of the strongest right now. So let me add ISRG on here, and I'll post this in the chat once we get through the list. And actually, let me sort this alphabetically, otherwise I'll move. Oh, wow. ALB is actually breaking down, but it's still a beautiful trend. Don't want to jump into a stock that's really, really strong. Ooh, AutoZone, it says post earnings. So you can trade it for a drift, which just means a 2-3 day in the same direction of the earnings move if you want to on AutoZone. Here we go. Another healthcare stock. Singa. Copart is, or no, not Copart. Oh, Camden Property Trust. I misread the ticker. Real estate stocks have not been looking good. They'll probably see more volatility as fear continues. I'm just trying to make a small selection here for you guys versus dumping this whole list. Deckers, did they have earnings? No. What is their shoe brand? Did they do Hey Dudes?
I don't know.
I don't know. This is one that people, I actually saw this for like months and months. People are like, buy Deckers, buy Deckers. Yeah, good thing we didn't do that. Uh,
John G says, need to call GD and order some missiles running low.
yeah, let's hope we're not running low, but probably a lot of those defensive stocks will be doing quite well, even with the markets
And if you're
not
having trouble
considering.
with the presentation uh, buffering, click that low latency slider underneath the presentation, that yellow slider. Click that and see if it helps.
I had another one here. Man, this list is just so long.
Got to go in a couple minutes.
I know. Oh, ISRG, we already got that one. Wow, LRCX has actually been a really good stock. This is one that maybe you want to put on your potential buy list. Don't buy it today. I mean, you can do whatever you want, but this is actually looking like a pretty good setup lining up at the moment. Match, this is match yeah, match.com. Communication stocks, not good seasonally. Actually, I think seasonally they're good, but right now, communication stocks, not pretty. We'll add match on there. Oh man, Micron, another one to add to your list. I mean, a really great stock that should do really well this year. Down 8% today on news. Not to when I say add to your list, I don't necessarily think this is a name to short. This is a beautiful chart. I think that chip stocks will make another run like crazy this year. Oh, cruise liners. Now this one seems like a no-brainer.
Norwegian.
Yeah.
They just had
I,
earnings just like 2 days ago, didn't they?
they just had earnings. Yep. They had it yesterday before the bell. But I have to imagine cruise
Administrator
lines
asks
numbers.
if the lotto board uses the Newton methodology at all.
Oh yeah. I will actually give you a little look at that. Oh, SMCI to the downside. This one was on the lotto board. Lotto board was all over SMCI last couple of days, down 6% today for bearish opportunities on the lotto board. These are all, and also these are names that you can look up on the lotto board if you do have that search feature. The lifetime members have the search feature. That's actually probably the easiest way to find the options on these. UNH, man, I just can't believe this stock keeps going down. This one is another one the lotto board has been showing bearish opportunities day after day. I should have taken it. I've just said I don't know how much lower this stock can go, but it just keeps going. You guys are gonna have a big long short list today. That's such a like counterintuitive way to say that.
Yeah.
Long short list.
It's like jumbo shrimp.
Yeah, exactly like the jumbo shrimp. All right, let me get
Well,
VST.
oxymoron going there.
I'm not gonna add VST. It's utilities. All right, here's our list. We've got a whole whopping one stock on the long watch list, and 1, 2, 3, 4, 5, 6, 7 on the short. Even so, guys, again, Newton updates every single day. So like this list is going to be a completely different list of stocks tomorrow because it's just going to give you the date that it first turns red. So all these will be first day reds. So tomorrow it's going to show all tomorrow's first day reds. The cool thing, someone brought it up, and I do have to run. Someone brought it up.
Administrator.
Administrator asked, "Is this momentum, this Newton momentum, used at all in the lotto board?" I mean, I think I'm on the wrong side. There we go. Oh look, it's pulling bull picks off already, and that's because of the point I'm about to make. CVS. Oh my goodness, did you guys take CVS yesterday?
Uh, no.
I think I talked about it in one of the sessions. I've got like 5 sessions a day now.
Oh, well, maybe in one of your like dedicated sessions, maybe, but not in
Yeah.
opening or closing playbook. No.
A couple people said yes. Yeah, CVS was one of them that I gave out yesterday. I said, man, this one looks good.
Okay.
It's the only one showing up on the top bullish picks today. And the reason that this looks blank is because there's some very specific criteria these stocks need to meet to be to make it on the bullish or bearish picks. And one of those things is it has to be showing positive momentum. So Newton has to be positive, meaning it's trading at an either average positive rate or above average rate. That's what you see here. Also, This MOM stands for magic momentum, which I give Jason the credit for that naming. I think it's a fun name, which is basically the day over day momentum needs to be positive. So it needs to be making a step in our direction. This one popped up yesterday for us. You can see here, just look at overnight. CVS up a buck 60. What is that? 2%. While the market's down 2%. Looks like some of you got the, I didn't get this one. I talk so much and give you guys so much here, I forget to take them myself. But it's already moved halfway to the target overnight. Sounds like someone already got a profit. Awesome job, Nathan. But when administrator, wow,
What is that?
I don't know, that's a long chat.
Yeah, that's going bye-byes.
All right. Uh, administrator asked, is the Newton tied into lotto board at all? Yes, it's right here. So this is going to be that Newton indicator reading. This is the magic momentum. This is the day over day change in momentum. Now, of course, if we flip to bearish, you're going to see we have no problem getting stocks today. Robinhood. I don't like seeing that one on there because I like Robinhood. But magic momentum, it's headed lower today. It's currently moving at a downwards accelerated rate. BDX is another one. Look at this one. Funny enough, ISRG. We just talked about this name. It just made it on our Newton short watch list. It was the first one on our watch list. Funny how that works, right? It's all automated here by the lotto board. Now, of course, if we'll cover this more in the masterclass today, but the full board, if you click the second tab, this isn't going to use that filter, but it does give you those readings. So you can easily see if you need a double positive, if you only want to trade the double positives, you can just quickly look. In this case, it's only CVS today. Same thing to the downside, double negatives. That's what this is automatically doing for us. It's pulling those double positives where the current pace of the stock is outpacing the market maker move, and it's got to be making that step in our direction. Today, it's only CVS to the upside. Downside, we got tons of opportunities. So what we're going to do now is I've got a masterclass coming up at 12:30 for the members only of the Lotto board. We're going to jump over to a room right now, start a class at 11 a.m., kind of a last chance here. If you want to see the Lotto board, we're going to show you how it works. Get it in your hands right now so you can start taking these plays. That link is posted in the chat. We're going to do it in a separate Zoom room, guys. This is a last chance before the masterclass to check it out. Get it in your hands. Again, hopefully you wrote down some of those picks from the Newton long and short watch list. If you have the lifetime, guys, if you have that VIP membership, you also get a search bar feature where you can type in any ticker and it will pull them up for you automatically. Very, very cool. So make sure to click that link in the chat. Jump over there. I got to log off to get over to that other room, guys.
All right.
But appreciate you all being here. I'll see you there.
All right, folks. If you don't have the lotto board, click that link either in the chat or in the banner above or in the announcements. It's everywhere. Go over to that Zoom room. We're going to be starting there in just like 3 minutes. And you can get the full explanation of Lotto board, get a chance to get it for yourself, and then you'll be a member for the members only meeting in a few hours later this afternoon. And then at the members only meeting, that master class, if you have questions about the Lotto board, you can get them answered there. So if you are already a member, then you can just jump straight to the 2:30 masterclass. If you're not a member of Lotto board yet, click on that link and jump over to that Zoom room that we're in over there to present the Lotto board and opportunity to get in that. All right, I'll stick around here for a minute or two. If anybody wants to private message me any questions, you can do that. All right, let's see here. This Lotto board is crazy, crazy amazing. Sean, I'll read your message in like 2 minutes. Let me just get a couple things done over here on the side. All right, let's see. You said the link shows code on a page. Huh. It does, doesn't it? All right, let me get you a different link. That's crazy. Don't know why it's doing that. Let me get you a different link. Hold on a second. On a board. All right, try this link, folks. Is that working for you? I changed the banner at the top also. All right, folks. We're going to close up here. If you private message me, just hang out for a couple minutes. I can still get to the messages after we close out the webinar. Just need to do a couple things real quick and then I'll come back to the chat.